In this video, I'm going to walk through a schedule of expected cash collections as part of a master budget. Our master budget typically starts with our sales budget. And the reason is sales is going to typically drive everything else in terms of, depending on what we sell, is what we're going to collect in terms of cash. Then depending upon what we collect, that's going to drive our production, what we can spend on labor, what we can spend on materials, selling, administrative, on and on. In this particular example, they've already predicted our budgeted our sales for the second quarter, April, May, and June, not just for the quarter, but each of those individual months. And what they're asking us to do then is predict the amount of cash collected from those sales. Life would be really easy if all our sales were in cash. That means we collected it right away. For example, we're predicting sales of $300,000 in April. Our cash collections also would be $300,000 in April if we collected everything in cash immediately. However, this company offers credit, or they sell an account, so we're not expecting everything to be collected right away. In fact, based upon their history, 20% of the month's sales are collected in that same month, so a small amount. The majority, or another 70%, are collected in the month following the sale, and the remaining 10% is collected in the second month following the sale. So that adds up to our 100%. They tell us bad debt. We typically don't have customers that default, so we're just going to ignore that because it's very, very small. So I'm going to start out and come down here and start to build what amount of cash do I expect that I'm going to collect in April. And I'm going to be a bit anti-accountant-like and go backwards. So this column, April, is the amount of cash I expect to collect in April. April sales are expected to be $300,000. Remember, we're selling on account. Of the April sales of $300,000, what amount of that do I expect to collect? It says that 20% is collected in the same month. So 300,000 times 20%, or 60,000 of the April sales of 300,000 are expected to be collected in April. Then we're going to back up 1 month. March's sales, they give us here, were 260,000. 20% of that would have been collected in the month of March. 70% of that would be collected in the following month, which would be April. So 70% of that 260,000, or 182,000, would be collected in April. Going to go back one additional month. February sales, they tell us, were 230,000. 20% of that would have gotten collected in February. 70% of it would have gotten collected in March, 1 month forward. The remaining 10% gets collected 2 months in the future, February, March, April. So 10% of that 230,000, or 23,000, would be collected in April. So the cash collections in April includes 10% of February, 70% of March, and 20% of April. 23,000, 182,000, 60,000, which is a total cash collections of 265,000. I'm going to do one additional with you in May. And again, I'm going to go backwards. May's sales are predicted to be 500,000. 20% of that is collected in the same month of May, which would be 100,000. Again, back up 1 month. 1 month before, April, 300,000 in sales of April. 20% of that was collected in April. 70% of that is collected in May, 1 month in the future. 70% times 300,000 is 210,000 of the April sales are collected in May. March sales of 260,000. Recall 20% of that was collected in March, 70% collected in April. The remaining 10% is collected 2 months into the future, which would be May. 10% times 260,000 is 26,000. So May includes 26,000 of March, 210,000 of April, and $100,000 in May, for total cash collected between all of those months of $336,000. Now, I'm going to let you go ahead and do June on your own. I've given you some check figures, and what I want to suggest is don't just back into June based upon those check figures as far as the total, because definitely I'm not going to give you the check figures for the total on the exam. Make sure you can work through those, but hopefully the check figures at least help you out to know what you're balancing out to. Some things that I want to note is I've left again June blank and highlighted here. Note that June's going to include collections from 3 different months. 1, it's going to include 20% of the June sales. 2, 70% of May, 1 month forward. And 3, 10%, the remaining amount from April. So just make sure you're focused on that. Another part of the problem asks us, what is the accounts receivable balance on June? So as of the end of June, what's still left to collect? And let me give you a hint. I won't give you the final number, but at least give you a hint to go along with this. Keep in mind, April is already fully collected. 20% of that in April, 70% of that in May, and the remaining 10% in June. So we bump down to May, 20% of that was collected in May, 70% of it would get collected in June. The remaining 10%, sorry, I added that a little bit too quick. The remaining 10% of that $500,000 would still not be collected in June and wouldn't get collected in July, so that's going to be part of our accounts receivable balance. Then think about June, $200,000. 20% of that would get collected in June, but the remaining 70 plus 10% is still not going to get collected until July or August. So of the June sales of $200,000, 80% of it still isn't collected because only 20% was collected in June, still hasn't been collected. So to get the accounts receivable balance, you want to add up 10% of May and 80% of June, and that'll give you the outstanding accounts receivable that still would need to be collected in July and August. So hopefully that helps you out with working through the schedule of expected cash collection.